Okay, this video is to demonstrate Chapter 16, where we're talking about cash flow statements. We're going to start by just talking about the operating activities section of the cash flow statement. A cash flow statement is something that we need in a business to help us figure out where all of our cash is going and where all of our cash is coming from. It's different from an income statement because our income statement tells us what our accrual numbers are, but this is going to tell us what our actual cash numbers are. So there are a few things that you need before you can prepare your cash flow statement. You will need to have a comparative balance sheet. A comparative balance sheet shows us what our numbers were in the previous year and what our numbers are in the current year for our assets and our liabilities. In this sample that we have, they've just given us 4 different accounts. We've got 3 assets, 1 liability. So if we have a look here for our accounts receivable, for example, we had $10,000 in 2016. We have $15,600 in 2017. That's a $5,600 increase. So we need to look at our numbers from the prior year. We need to look at our numbers for the current year and figure out what the change is. Is it an increase or a decrease, and how much is it? The other thing that you need before you can prepare a statement of cash flows is your current income statement. We need to know what our profit or loss was, and there's a few other things that we need from there as well. Also, you're going to need various other information items. So when you're doing a question like this for Chapter 16, they should give you other information. So look for the other information as well. In this question, they're telling us where this loss came from and what the asset was that was sold, what the cost was, what the depreciation was, and most importantly, how much cash did we receive for that asset. So in preparing the statement of cash flows for this question, you're going to start your statement of cash flows in the same way for every one that you do. You're going to have your heading here, company name, statement of cash flows for the year ended, whatever year it happens to be. We always start with our operating section. So if you've done the reading and you've gone through the notes and worked through some of the questions in there, you'll see that the operating section is first, so operating activities. The first thing that you always list in your operating activities is your profit or your loss. In this case, we have a profit of $42,000, so that's what we're going to put here in our statement of cash flows to start with. What we're trying to do here in the operating section of the cash flow statement is figure out what is our accrual profit or loss and convert it to what our actual cash profits and losses are. In order to do that, we start with our profit, then we need to do the adjustments from accrual to cash. So we call that adjustments to reconcile profit to net cash provided by operations or operating activities. So this is exactly what we're doing. We're reconciling our accrual profit to what the cash was that was provided by our operating activities. The only accounts that we look at in order to reconcile profit to cash provided by operating activities is, first of all, our current assets and our current liabilities. We don't look at cash, obviously, because that's the account that we're reconciling, but we're going to look at all of our other current assets and current liabilities. In this case, we have 4. We have 3 current assets, 1 current liability. So we're going to start with the first one, accounts receivable, and we have a $5,600 change in accounts receivable. If your current assets increase, it is a decrease on your cash flow statement. So an increase to the current asset is a decrease on the statement. Okay, so in other words, There is more in accounts receivable than there was last year, which means our profit would be lower. So we're going to go over here and we're going to say increase in accounts receivable. And that is a decrease then on our statement here. Okay. Our next one is merchandise inventory, and there was a decrease, 93,000 to 86,000. So a decrease to a current asset is an increase on your statement. Okay. So we're going to go over here again and say decrease in merchandise inventory. I'm just abbreviating to fit it all in here, but you know my rules on abbreviating on a statement, and that's an increase on our statement. Okay, next one, prepaid expenses. Prepaid expenses went up from $3,000 to $5,800. So an increase in a current asset is a decrease on the statement. Okay, so go back to your statement. Increase in prepaid expense. Okay, that's a decrease on our statement. All right, that's 3 out of the 4. So now we're on to our current liabilities. So if you have an actual balance sheet, you're just going to go through all of your current assets and then all of your current liabilities, excluding cash. So we have accounts payable, that's a current liability. It has decreased by $4,200. So as you can probably expect, the opposite is true for current liabilities as compared to current assets. So a decrease in your current liability is a decrease on your statement. So if we go back over to the statement, we have a decrease in accounts payable. Of $4,200, that means we have a decrease here in our statement of $4,200. Okay, if you have read the notes on the operating activity section of the cash flow statement, you'll know that there are some other things that get included in the operating activities. One of them is your depreciation expense. Depreciation expense comes from your income statement. Now, we have to adjust our cash flow statement for all non-cash items. Depreciation is a non-cash item. If you remember, depreciation is simply an adjusting entry. There's no cash that changes hands there, nothing to do with cash. So our depreciation expense is deducted from the profit here in order to get your net income or your final profit. Because it's deducted on your income statement, we add it back on your cash flow statement. So depreciation expense always gets added back on your cash flow statement. So depreciation expense, $10,500. Let's add it back. Okay, what other non-cash items do we have on our income statement? Well, a loss or a gain on sale of an item, that's a non-cash item. This loss doesn't mean we necessarily had to give out an extra $4,000 in cash. It just means that what we received for that particular item was $4,000 less than its book value. And book value is derived from the cost less depreciation, right? So loss or gain on an asset or an investment is also a non-cash item. So this is the other non-cash item that you are going to adjust on your cash flow statement. Okay, so a loss is deducted on your income statement in order to come up with your profit. A gain would be added in and increase your profit. So because this was a loss, It was deducted to come to our $42,000 profit. So we're going to have to add it back on our cash flow statement. So loss on sale of assets. Okay, the $4,000 was deducted on our income statement. We're going to add it back here. If it was a gain, it would have been added in on our income statement and we would be deducting it here. So those are all of the things that are included in the operating section of the balance sheet. The change to every current asset and current liability, then all non-cash items. And usually your non-cash items are going to be depreciation, amortization, losses, and gains. So those are the four things you want to look for to adjust as non-cash items. So if we look at what we have here now, we take our profit, add and subtract all of our adjustments, and what we come up with is our net cash flow from operating activities. Okay, 42,000, add and subtract all of the adjustments, we come up with $50,900. Okay, so our cash flow from operating activities was $50,900. That means over the course of operations of our business, the operations themselves contributed $50,900 to our actual cash balance. Okay, so that's just the operating section. We'll go through another question later regarding the entire cash flow statement. So this is part one of the demonstration problems that you have online. So give that a try.